Roman, or if you're on Instagram, you can find me on Maggie Roman _ realtor.
Great.
Yeah, as far as me, you can find me on LinkedIn as well, Nelson Leonor. Facebook, same thing, Nelson Leonor. And on Instagram, it's going to be 2023_Nelson.
Okay, great. This way everyone knows where to find y'all, find us. So go ahead, Maggie. Why don't you jump in? We're excited to hear the latest on real estate.
Yes, of course. Just a second. All right. Well, obviously, we've heard a lot about real estate this past year. Is the market crashing? Is it not? I think it's been quite the talk. Obviously, it hasn't crashed yet. I don't have a magic ball. I don't know what's going to happen in the future, but I can tell you what we've been seeing right now in Dallas-Fort Worth. And I just want to make it clear that there is not just one real estate market. There's small sub-markets, such as Dallas-Fort Worth is its own market. Houston, Austin, there are separate markets. And obviously out of state, you have your other markets as well. So I'm just focusing on Dallas-Fort Worth right now. So here in Dallas, Collin, Tarrant, and Denton County, we're seeing the days on market, which is about 17 days, which is not bad because we do have limited inventory. If there's a good deal, if there's a house in a desirable area, it's going to go rather quickly.
17 days sounds pretty good to me.
Right. So that's 17 days and then it goes under contract. So add about another 30 days for it to close. The average list price, $425. The days of getting a house under, $350. I mean, you have to go a little bit further outside the city to get that, but the average is around $425. And list to close ratio 98 to 100%. So we're not seeing too many homes sell under list price. We're getting list price. I mean, maybe if it's priced correctly, you do see some multiple offers, but not as much as we've seen the last few years where people were bidding 10, 20, 30, 50K over to get a house. With interest rates, people are a little bit more conservative, but if they have a choice between renting or buying, they can afford it, they would rather buy. And lastly, as you can see, homes in DFW are still appreciating almost 5% this year. Obviously, biggest challenges, especially for first-time home buyers, interest rates are now, Nelson can tell you more about this, but they're, I think, above 7% now. Some people say they may even get to 8%, but I don't know. We'll let the expert talk about that. Like I mentioned, limited inventory, unaffordable housing for first-time home buyers, and the sellers who bought 2, 3, maybe 5 years ago don't want to trade in that good interest rate for 2, 3%. And I've even heard some sellers are sitting on that house and renting it out and maybe moving to something else instead of selling. So what's the solution? Builders are trying to keep up with inventory. But I think we do need more affordable housing. I don't know how we're going to get that. But there's other creative financing strategies. There's loan assumption, IT loans, which we're going to talk about more today, subject to seller financing. A lot of investors use these strategies that may not be very popular or known to the regular buyer. So that's why I would educate yourself with a realtor or a loan officer or a real estate professional to kind of put you in a better position to be able to buy a house. And obviously speak with someone like a lender like Nelson to see what your strategy is and what your situation is and what can you afford. And then here's my phone number. You can call me, text me, or you can send me an email, or like I said, you can find me on LinkedIn or Instagram. And I think that's about it.
That's great. That's a really efficient snapshot. I mean, you mentioned a couple of things already that we'll need to have both of you come back, and we're learning about the ITIN loans today for international real estate buyers. But you mentioned a couple of things already that'd be worth a follow-up webinar later this year, early next year.
Yeah, definitely.
And I mean, just as as whether you're new to DFW in North Texas or you've been here for a couple of years. I've only been here eight years, but I'm always hoping that gentrification will help on the affordability side, but it just doesn't seem to work out that way here or anywhere else.
Yeah, I mean, I'm thinking like, more and more people are moving to DFW. So the affordability, unfortunately, I see it on my end getting worse and not better. Unless maybe all these like institutional buyers like that started buying up all these rentals start selling them, maybe. I don't know. I'm just kind of,
I don't have a crystal ball or a magic 8 ball either.
Yeah.
Given what they've stated publicly as their investment mandates, there's only two ways that would happen, one is political, basically political pressure causing new laws to be formed or to apply the anti-monopoly laws to them, which doesn't look likely currently, or even worse, a major economic downturn, major recession forcing them to reevaluate their portfolios, or a combination of the two. But
right, exactly.
Yeah.
So I'm gonna unshare now.
Okay, well, thank you. That was really super efficient.
Yeah, thank you.
Yeah, that was good, Maggie. Thank you for updating us. So I guess on my end, I'm probably gonna take a little bit more time.
Yeah, of course. I mean, and we have
take your time.
so
I guess I'll share my screen real quick here, so y'all can see my information, where I'm located, in case you guys want to come visit. We not just do, mortgages. We're just like a bank, like any other bank. So we do other things to help out.
I'm going to jump in and interrupt you already. Thank you, Benny. Yes, you offer a lot of the services other banks do, but I'd like to say for the audience, quite frankly, why we're doing this webinar is I was fascinated to learn about the services that you offer, particularly for international real estate buyers, the ITIN loans, and international home real estate buyers. So I would say that not every bank or financial institution understands that market, has a language capabilities, and is looking to serve that market. And certainly not every bank is willing to do so at, quite frankly, in a way that makes it more affordable for these home buyers to. So I appreciate your modesty, and this webinar is of an educative, that word exists, basis. We're not making investment promises or service promises here. However, though, I would like to say sincerely, it's great to see a bank, taking the lead like you're doing. So I'll stop. I'm not getting paid to say that. I'm just saying that because my honest impression.
Give yourself more credit, Nelson.
Right.
We're all doing this webinar totally to give free education. So I'll stop there.
Yeah, definitely. Thank you. So yeah, let me share my information here real quickly so you guys can see it. Can you guys see it right now? Hold on, let me see. There we go.
There it is. We see your photo. Yeah. Thank you for your service.
Oh, thank you. Thank you. Yeah, so thank you. As I was saying, been in the business for 16 plus years. I actually started my career right before the crash of 2008, 2009.
Wow.
Yeah, so I've seen cycles, things come and go. I've seen interest rates all the way down to, believe it or not, below 1%, below 2%, excuse me. Yeah, I mean, they had to, right? Right after the crash and all that, people would buy points and bring that interest rate down below 2%. It was just incredible to see. But then, of course, after the market started recovering, yeah, they went up little by little, little by little. And then, of course, we have, different cycles going on, different news, the pandemic, and that helps bring down the interest rates. I guess for the audience, if you don't know, all of these interest rates are artificially being kept at a level where it can
Interesting.
stimulate the economy. Because if the government was to get out of the market, believe me, interest rates would be 30%, 35%, who knows. So every day there is an incentive for the government to buy these mortgage bonds, and they buy them by billions. So if one day they stop doing that, which in the back, and you see just different things going up, and down, right? So I've seen a lot of market fluctuations, a lot of cycles going on. We're in that cycle. We'll eventually reach a point. I don't think we'll see 2%, but we'll definitely, see the fours, maybe the fives again, hopefully within 2 years or so, maybe 3. It just depends how everything goes, right? We don't have something to tell us the future, but I'm hoping that that's what's going to happen. Usually about every 9 to 12 years, you'll see something, happen in the world, in the markets that will, help that happen, have a lower rate or whatever the case may be. So I started my career before then. Since then, I mean, I've, been working with the community. At first, it was just, across the nation. I used to help people with mortgages in California, Nevada, most of these markets or states where there's a lot of Hispanic or, minority population. And then, eventually I started working with local banks such as Simmons Bank, which is a community bank. Is usually those are the banks that I'll say they'll invest more in trying to help the local community or just as a whole, depending on where they are in the states. If there's multiple states they're in, that's what they're going to do. They're going to try to provide those loans that other banks don't care to have available, and they'll work with you. It's like a relationship based. This is different from the bigger banks. So anyway, I've been working with them for 1.5 years. This program actually started with them, and they really got motivated once they hired me, because now they had somebody that could kind of promote it and all that stuff. Because before they just didn't have someone, and I have kind of pushed some stuff. We have kind of modified things in the program that will make it a little bit easier for people to qualify as well. As you'll see here once I start explaining some of the things that the program has. So let's go to the next slide. Let me see if I can,
Sounds good.
let's see, a little bit of a, okay. So real quick, I'll just tell you guys about Simmons Bank. Just real quickly, in 1903, that's when it was founded. It's from basically Pine Bluff, Arkansas. And then eventually we have bought different banks, as you can see, some of the banks that we bought. And it wasn't until, I believe it's 2010, which is the next slide, that we actually started moving down to Texas. This right here is a little bit old data as far as, the size of the bank in assets. I think we're getting closer to 30 billion now. As far as locations, it's more than 200. We're about to open 2 new locations here in Dallas, South Dallas, actually. There's going to be one on Hampton in Illinois, where Oak Cliff is at. Right now, we're at Winewood Village, which it's Illinois and Sang, I believe. But that's was a temporary location. Now we're going to have a permanent one. And the other location is what used to be called Redbird Mall, which is over there by 67 and 20 near Duncanville. So the first one, I believe we're going to open it in October, the second one in November. And we'll have, of course, the celebrations and all that comes with it. So just keep in mind of that if you're in the area. We also we're advertising that by the freeways. I think there's one sign that we have in South Dallas, so that you can kind of get an idea that, hey, we're here. We're here to we'll be here to help the community. So next slide over here kind of shows you the history of the bank. If you look at it in 2010, that's really when we started, like, the growth. Yeah, the growth was just really exploding there. We went from a $5 billion bank to a $30 billion bank in like 13 years. Nice. So around 2017, yeah, that's when we bought Southwest Bank, and we moved to Texas out of Fort Worth. And of course, Southwest Bank had several locations. Then we went and bought here in Texas, Spirit of Texas Bank, which had a lot of different locations. And now we're in DFW. We have about 18, well, soon to have 20 locations. We're also in Houston and Austin, San Antonio, and Corpus Christi.
So does that mean you can pretty much help folks anywhere in Texas? It sounds
yes.
like.
Yeah, I mean, as far as any secondary market loans, and those secondary market loans are FHA, conventional, USDA, VA, those I can help in 48 states. As far in Texas and some other states that I'll show here in a little bit, we can provide our portfolio loan products, such as the one we're going to be talking about. Which is,
I mean, I think the key thing, because we often have guests joining us from outside of Texas. We've had guests from outside of the country. We've had guests from California, from Illinois, et cetera, et cetera. So it's good for everybody to know. Though the three of us are based in DFW,
yes.
Nelson's happy to help anybody, as he mentioned, pretty much everywhere except Hawaii and Alaska, I'm guessing.
Well, actually, yes, Hawaii, Alaska, and now that you mention it, California. Unfortunately, we don't do California, and New York. So it's actually four.
You don't do the two most complicated, so actually, that makes sense.
They are a little bit complicated.
New York City myself, so, okay, well, just again, so, but, I would say as well with Maggie. Maggie's a deep real estate experience. I wouldn't hesitate to reach out to her either if you have a question, a general real estate question as it pertains to residential in Texas, so. I'll stop
Thank
it.
you, Andrew. Appreciate it.
Okay. So let's talk a little bit about the ITIN Advantage loan. Like I said, this was created back in June, I believe. Well, it was before June, but we had to, well, I had to talk to them and said, hey, there's some things you need to change, okay? Because, yeah, they're new to the market. They weren't used to providing this type of service to, it was a different demographic to them. So I had to explain some things to them about it. And they have their open ears, and they're very open to different things as long as every bank is risk based. I understand that, but at least they put a little human touch to it, right? So real quickly, so this is going to be a fixed rate product. It is for you to put 10% down. There is no private mortgage insurance, which I will explain what that is for those of you that don't know that. They will do.
Let me jump in. Percent. That sounds pretty good. Isn't the average more like 20%?
Yeah, for you not to have private mortgage insurance, you have to put 20% down. And that's for me and you, Andrew, and Maggie.
Everyone else.
Exactly. So most of these, I would have to say that most of these loans for those banks that do offer it, the limited amount of banks that do offer it, I'm not sure if they do charge mortgage insurance, but if they do, this not charging mortgage insurance really helps the clients with either buy more home for the same amount of payment, for a little higher payment, right? Because now they can afford it. They don't have that extra payment a month, or they just going to have a lower payment compared to somebody that gets the same house at the same price because they don't have to have mortgage insurance.
That's a pretty clear message that the bank is ultimately paying the PMI for them.
Yeah. So another thing that I can tell you is that I can include in these loans, I can include condos as well. Something that now the market has a separate loan just for condos. But I condos.
What's the amount that the condo price can be?
We don't have a limit as far as the amount. As long as you qualify under the different terms that I will outline here shortly, we don't have an amount. I mean, right now the conforming loan limit is 726 and change. So that's a lot of money, 726. But you have to keep in mind that, I mean, for you to make that, that jump like that, you have to have a considerable amount of income. And I don't know if we're going to be able to fit something that high, right? Because it goes.
I was just curious because condo prices are also trending up, right?
Yeah.
Yeah, depending on the area, but sometimes it could be less than a single family home, but obviously depends on location.
And then there's also the issue of like, if you own your home, you have to maintain it, but you don't pay a monthly fee typically to the organ. Like when you have an apartment, often you have to pay certain fees that go into the general maintenance, right? Is that how it works? You have a condo?
Yeah, you're talking about the homeowners association?
I don't
Fee?
know if it's called that for a condo, but yes, something equivalent to that.
Yeah, yeah. Yeah, you have a homeowners association fee and that can range, it just depends, like Maggie can tell you all about it from location to location, right?
It could get pretty expensive for sure. And that just adds on to your mortgage payment.
Okay, thank you.
Correct. So, as far as the product's concerned, so like it says, we can do one unit, or one, or a single family, what's called a single family home, or we could possibly do a condo with the program. Let's go to the next one. This one explains a little bit more further in detail. So it is considered a conventional loan, which I think a lot of realtors like that, because the sellers don't like to see certain loans come in as an offer. Now,
Why is that?
well,
What-
in
what-
my opinion, I think it's education.
Okay.
But it's just they have a certain feeling because of what has happened in the past of certain loan products that they don't really like because of certain experiences they had in the past. But I think they're still good products, for somebody to use. But when they see the word conventional, they're like, their eyes just light up and say, okay, I want that one.
It's a smoother process. And, I mean, VA, FHA are great products for first-time home buyers and obviously veterans. But I think it's a federal loan, so there's more guidelines that you have to abide by and maybe some fees and stuff like
Lower
that.
too, right?
So
And what's this 6% contribution concession?
So yeah, let me go down the line so I can tell you. So our FICO score, if you have credit, is 620. That's the minimum. So we don't care if you have a 760, 800, whatever. As long as you have 720, 620, I'm sorry, then you're fine. You can use our loan. On the other hand, though, there's people that have no credit whatsoever. And I'm not saying you having bad credit is no credit. No, that's having credit. If you have bad credit.
All right, so I've got to ask the question now that you raised it almost. What's better, no credit or bad credit?
No credit is better. And I'll explain why. So when
Okay.
I pull these credit reports, once they apply and I pull these credit reports, I have no data. I don't know if you're somebody that's going to pay the mortgage bad or good, right? But what I do is I do take non-traditional credit. And by that, I mean, for example, most people rent, right? So you're going to have some kind of history. In rare occasions, people do not rent. So what I need is pretty much just verify the last 12 months on how you have, have been paying. So that's one. I will say that will create a new trend line, for you. The other one I use is if you're paying, gas, light bill, water, that's a utility. So most people have that as well. Okay. So again, there's exceptions, but I use those two. And then the third one can be anything else you're paying on a monthly basis. All I need to do is verify the last 12 months. And I got you a credit profile that I can use, and I can tell the bank, look, we don't need credit. He shows or she shows that they've been paying good for the last 12 months. So I don't need the 620 FICO. The down payment is 10.01%. And I think, when I first heard about it, I was like, that's crazy. Why do you need that 0.01%? And I think it has a lot to do with regulations, things that, like I said, we want to help out. And somehow I think they figure out a way to lower it to 10%, but put that, I think that 0.01 is a key to keeping it at 10%. I don't know. They never explain exactly why, but I know it's regulations. Property type, like I said, is single family residence, condos, townhomes are permitted as a primary. Unfortunately, at this point, we don't allow investors, because I've had a lot of people ask me about, I have a home right now and I want to, buy a rental, or I have a home right now and I want to buy another one, but I want to keep that one and use it as a rental. Unfortunately, in this program, we cannot do that, because it was designed originally as helping people get into a new home,
Yeah,
not
getting the
building
imagine
investors.
the first time.
Right. So that's why it is not at this point.
Can I ask you all a question? What is the definition of townhome or townhouse? Are they the same? And what's the definition in this context of applying for a loan?
Maggie, do you want to answer?
I don't know the specific definition, but condo is like its own like building, like, like they have elevators to get to, like,
Okay.
like a
Well,
high rise is like a condo.
Alright.
A townhome, you can have 2-3 story townhome, and it could be it's separate
okay.
building, but it's still like within the townhome community.
So
It could have a HOA association.
Number of stories, because there are plenty of homes that would not apply for this mortgage, but there are plenty of homes here in DFW, right, that are 2-story McMansions. Is it that third story that makes it a townhome or a townhouse?
Not necessarily. Like it could even be a townhouse with 1 story.
All right.
But it's within a townhome community,
All right. Well, let's.
usually with an HOA as well.
Okay.
Yeah, it can get confusing, Andrew, sometimes, because I've seen condos where, again, it's a community, it's fenced, some even fenced sometime, and it's a 1 story, like a
1
regular
story,
house.
yeah. So
Yeah, I've seen that. So I'm like,
Yeah.
oh, condo? Okay.
I think
Yeah,
part of the potential confusion is sometimes the way terms are used casually or colloquially is different than how a bank would use them, which is very different, a little different than a legal definition, which is a little different than like how it's used in marketing. Because I've been in some quote unquote townhomes and townhouses that were really nice. I'm like, okay, so it's a nice modern big house. It's hard for me to identify what made it a townhouse or townhome. And then I was also right in downtown Dallas, and a very, very nice, to me, was a 3-level condo almost. But they're like, no, this is a townhouse. Okay. At any rate, they're nice homes, but that's why I was curious as it relates to the loan.
I guess usually condos I think of like a high rise, but it's not.
But if you have Maggie, if it's a condo that's 3 levels.
No, not necessarily. Like sometimes the MLS, you can use that term interchangeably,
Okay.
where it's literally has condo / townhome, but
Okay.
yeah, it could get confusing.
All right, I
Yeah.
won't take this too far off track,
Yeah.
but you guys are going to answer any questions like that anyone may
Right.
have. All right,
Yeah,
thank
definitely. Well, going down the line, rates in the secondary market, they change every day, and fluctuate based on news and everything that's going on in the market. Our rate is changed once every month. It's on the 1st of each month that it's changed. So you can pretty much have a rate guaranteed for 30 days. You apply on the first day of the month and maybe perhaps find a home almost towards the end of the month and you'll have the same rate. So that's a plus in this market because they've been changing quite a bit. In the secondary market, the rate is above 8%. And in some cases, especially if you're an investor, yeah, it's possible that you can reach 8.5. You know, it could go, depending on credit scoring, other things, a little higher than that. So having that, it's definitely an advantage. Like I explained before, it's a fixed rate, 30 years. We have no prepayment penalties. It's one of the things that this segment of the population kind of wants to hear. No prepayment penalties. Wow, really? Because in the past they've had that.
A lot of Latinos, they come from a culture and a philosophy where they're going to work hard to pay off that loan, you know, as quick as they can, which may still take some time, but it's going to be faster than 30 years.
Yeah. So yeah, so basically you can pay it off in 5 years if you want. You can refinance it. You can sell the home. There's nothing attached, no strings attached.
That's great.
Yeah.
Sorry, I'm gonna interrupt. I'm gonna switch to my phone because it looks like my computer's running out of juice.
Or no problem. If you need to drop off and reconnect, we'll reconnect you.
Yeah, okay, I'll reconnect. Sorry, go on.
Go ahead. So you were asking about the interested party contribution. So we allowed up to 6% of the purchase price to come from an interested party, such as it could be Maggie as a realtor, giving them a credit. It could be the seller, you know, giving them a credit. So we do allow that up to 6%. So for every 100, it's basically 6,000 that they'll be able to get.
Give them a credit.
What was that?
How would the seller give them a credit?
Yeah, pretty much on the contract, Maggie would go ahead and negotiate that. And they would, for example, you know, give them a concession for title insurance, or they'll give them 8,000 based on, let's say, you know, there's some repairs that need to be made.
Okay, now I've got it. Great.
Yeah.
Now I've got it.
So we use that towards their closing costs, and it can be used toward that 10%. So if the seller is giving 6%, I mean, the client can, all they need to put down is 4, you know, plus any closing costs, of course. So, you know, it's in most programs, it's less than that. It's 3 or 4%. So let me go. We spoke about no mortgage insurance. So on the mortgage insurance, so I can explain it farther. Anybody that puts 20% down has no mortgage insurance. Pretty much, it's like, it's a risk-based insurance. It's like, you know, you have insurance for your car, you have insurance for your life. Now this is insurance for the actual mortgage. It does not benefit the client. It benefits the bank, because the bank, if they don't pay their mortgage, then they can go ahead and claim a small percentage of the loan.
That makes sense.
And so if you you know, only put 5% down on a conventional loan example, you will have, you know, mortgage insurance. Right now it's, I mean, it could be $200 to $300, sometimes even more a month to have mortgage insurance. On an FHA loan, insurance is for life. So you cannot remove it to where in a conventional, if you're in the house for several years and you tell your lender, you know, I've been paying good, you know, all that, and I would like to do an appraisal to see if the, you know, the value is at 80 or below. so that I can get that mortgage insurance removed. That can be done only on a conventional, not an FHA. And of course, the VAs don't have mortgage insurance. That is just from the get-go, they just don't have it. So you don't have to worry about that. As I stated before, you cannot own any other properties. Land, yes, you can own land as much as you want. There's no problem with owning land. Documentation. So documentation doesn't change too much from the normal loans, any conventional loan, FHA, VA loan, USDA. We'll basically ask you for the same. The only thing that changes with us is that on the W-2, the tax returns, we do add 1 extra year. So you have to have the last 3 years, of tax returns. And if you have business tax returns, the last 3 years of business tax returns as well. And the third year is basically just so that they know that you've been here at least 3 years in this country. I'm trying to change that. So we've been talking and stuff to see how else we can, provide proof. But some people, I've run into that particular situation where they don't have but 1 year or
I mean,
years.
it's not often in the media, but we have a lot of, I know right here in North Texas, we've got a lot of international people that are actually high income earners, high wage earning international people in tech, etc. And they have that frustration because they move here from wherever abroad, and with the expectation that as soon as they can, they're buying a home because they know they're going to be here for typically five or more years easily. And then many fall in love with Texas and decide to stay. So yeah, it's a little frustrating for them that, wait a second, I'm making 6 figures. I'm employed by a Fortune 1000 company, and because I don't have a social security number yet, I can't, buy a home. So
yeah, exactly. So in some cases, like I said, we're a bank committed to helping the community. So I do have people that I've worked with in the past that can help them out with filing those tax returns, amend them, things of that nature, so that they can prepare themselves for, maybe a couple of months down the road, apply now that they have, that information, right? It's very important.
I'm so glad you mentioned that, and I think listeners, that's really important. What in general, if there's something here that intimidates, you or whoever you're working with, providing services to, just get in touch with Nelson, and there, if it's tax side, Nelson knows good tax people, CPAs, etc. If it's something not tax related, I mean, you can see that Nelson and the bank really are looking to try and expedite this and be, again, helpful to the community and welcoming. So
yeah,
I would say get the process started. So, and then it's always easier, get it started, see what you need, than to say, okay, let me wait till I have absolutely everything, because as you mentioned, maybe there's some tax work still being done, or they didn't realize they needed it. So that's a good point. Thank you.
Yeah, exactly. So what I try to do is, I try to do a pre-qualification. I try for them to apply first so that I can see the whole situation. What is it that we need to work on? If we can do, something now, what is it that they need to work on? Because education is key. This segment of the population, if there's one segment that doesn't have the education, is this segment. And I'm not saying it in the wrong way. It's just that it is what it is. you know.
And again, I can tell you, I moved abroad, well, twice, once only for half a year in Japan, but 13 years in Mexico. I don't speak Japanese, and I did not then speak Spanish. And anytime you leave your home, even your home city or state, but let alone your home country, yeah, it's it's almost, how could you possibly be well educated on this stuff, right? Because it's different.
Exactly. Only the people that run into the right people are the ones that create a spark in their head, and they start,
Well,
finding.
that's quite frankly another reason we're here today, is to help. We are the right people and to help create those sparks. We're getting close to the end of our webinar, so Nelson, why don't we do this? Nelson, can you just, once you finish on the ITIN, maybe
Mhm.
just briefly touch on what other services you help folks with? In this,
Sure.
in all communities, not only Hispanic and Latino and international. And then
Yeah.
you do speak Spanish, correct?
And what else, I'm sorry?
You do speak Spanish?
Yes, I do. I do speak Spanish.
Any
I
Spanish?
I speak a little bit of everything, but Spanish and English are my fluent languages.
Great. And then Maggie, if you could do the same once Nelson finishes, just reiterate, how you're here to help folks, so that we have that, because we're focusing today on one very specific thing, but I think it's worth
Okay,
closing,
Yeah.
to get close, to just make sure folks know we're here to help you with not
okay.
just on,
I think I was muted.
let me, and we're here to help you not only with loans. I mean, we're here to help you with a whole range of things. So I'll be quiet and let you get back to it.
Yeah, sure. So anyway, you see the list of documentation and stuff that you need. It's self-explanatory. If you have any questions about any of them, please go ahead and reach out. I'm gonna go ahead and go to the next slide here and kind of explain to you where we can do these mortgages at. Right now, we cannot do it all across the Texas region. It is something that I think is regulatory, and depending on the bank's presence, wherever they have branches, how much of a distance and all that. So the upper part of the state, of course, we know that's Dallas-Fort Worth. Those are the counties: Palo Pinto, Parker, Tarrant, Denton, Cullen, Dallas, Kaufman, Johnson. All those are the counties that we can do these loans in. If you go kind of towards the middle part, Williamson, Travis, that's Austin area. And if you go down that, it's pretty much San Antonio, right? If you go to the right of that, that's Houston area, Montgomery, Harris, Fort Bend. And right at the very bottom there, Nueces, that's Corpus Christi. So that's where we can do these loans at. Those are big markets. Millions and millions of people live there. So it's a good place to start. Now, let me talk real quickly about income limits, and we already know about location, but I want to tie this into the income. As with any product that is created by a bank, they cannot just let anybody come in and get this loan. So they have to put some limits. So the max in this Dallas-Fort Worth, well, in the Dallas area specifically, is you cannot make more than 126,720, and you can just go down the line. As you can see, in Fort Worth, it's 117, Austin is 146. For obvious reasons, it's very expensive. Corpus Christi, 92, Houston, the Woodlands and Sugar Land is 111, and San Antonio, New Braunfels, it's 106. So as long as you keep the income in the application, this is not household, okay, like the USDA does. If 4 people live in there, you have to, get everybody's income. And if you go over, I'm sorry, you can't qualify. Well, in this case, it's just whoever is applying. That's what we're going to look at.
That makes more sense.
Yeah.
Good to know.
Yeah, definitely. So, I mean, that's pretty much it on the, you know, I don't want to go into more details. Some of the stuff is on a case-by-case basis where we help
This
people.
was a really good introduction. We covered certainly all the basics.
Yeah. So, but if you guys have any questions, just let me know, and you know, I'll try to answer those. Let me unshare my screen real quick, and that way, see if I can find the button. Uh, okay, technical difficulties.
I wouldn't worry too much about it. Why don't, anything else you want to mention that you offer, offer folks, whether it's on the personal side of buying a home or on the business side?
So, besides, you know, the mortgages, we do offer, like for people that want to build credit, and this goes with people with ITIN or social security numbers. We do have a credit card. They can get a secure credit card. And a secure credit card is like, you know, you want a $1,000 limit. Well, you put 1,000 in savings, and we'll give you a card for that. 5,000, okay, put 5,000 in savings, and we'll give you that card. We also have a loan. It reports as a loan, but it's really like a savings account that you're actually saving into for 12 months. And then we're actually reporting that as a loan. So that kind of builds your credit up.
Okay.
Yeah, so that's for ITIN or Social Security. Of course, anyone with an ITIN number can come and open a savings checking account. We have an app that you can download to your phone, so you can, you know, be looking at all your accounts all at once, all that.
Do you help folks in the Latino community if they need to wire or send wires, a specific term, but wire or send funds to Mexico or Colombia or
Of course, yes, we do have that as well.
okay.
Yes.
And also I had a question specifically from someone in Mexico who lives here in Dallas, does business internationally in both countries. If he needs to send funds from a business in Mexico to the US, is that something that you would be able to help them with once they set up an account?
From the US to Mexico?
But he's curious about both ways, US to Mexico,
Yes.
and then also. What about if he's sending it from Mexico to US, he could send it from Mexico to his account with you?
Yes.
Okay.
That is something that can be done. Mhm.
All right. So Maggie, why don't you reiterate a little bit more broadly, you know, how you help people? And we'll take it from there.
Thank you for the great presentation, by the way, and I appreciate you guys having me here. So yeah, I've been working with buyers, sellers, investors for the past 9 years now. I love helping first-time home buyers and kind of guiding them through that process. And yeah, you know, feel free to call me with any questions. I think I have the fun part of looking at houses, but I would definitely say get your loan situation, you know, done first, because we can't put offers on a house without a pre-approval. So definitely speaking to someone like Wilson first is step number one in the home buying process. I think everyone reaches out maybe to a realtor because they're like, I'm ready to get into a house. But first you do need that pre-approval and that loan at least started. And then you can start looking at homes, and I'd be happy to do that.
Yeah, and in a market that's still as strong as North Texas, you want to have everything ready to move, because I mean, it's as you saw earlier from Maggie's presentation, things move pretty quick. They're still moving very quick here in DFW, North Texas.
Yeah, it's not the same for other states. Mhm.
Yeah, I mean,
Yeah.
we're fortunate here in North Texas and in Texas in general. It's definitely not the same everywhere, but as Maggie said, real estate markets are not, there's not really one residential real estate market. And here, in all the parts of Texas that you mentioned, it's still ultimately a seller's market.
Yeah, definitely a seller's market. So, you know, you could be still in multiple offer situations, depending on the property, for sure.
All right, well, we're right on time at 11:59, talking about decision. Thank you, guys.
Thank you.
Yeah, so again, why don't you just share with everyone what's the best way for them to reach you, and if you're on LinkedIn?
I'm just Maggie Roman on LinkedIn or Maggie Roman _realtor on Instagram. Those are my main social media platforms.
Yeah, for me, it's mainly LinkedIn and Facebook. You'll find me under Nelson Leonor.
All right, and this is Andrew Barker, CPA, MBA at Middle Market Advisory. You can find me at middlemarketadvisory.com, where we have a blog. And also I'm on LinkedIn at least once a day. Anyone who's joining later is watching this on the replay. For any reason, if it's easier, just reach out to me. I'm happy to connect you with Maggie and Nelson. So thank you, everybody, and thank you so much, both of you. This was the first time we've done sort of a panel and a virtual panel
Right.
in place, and you really pulled it off. Really valuable information, really helpful. And I learned a lot today too, which is I'm also learning from these webinars. So I thank you so much.
Thank you.
Andrew, thank you. Yeah, thank you for organizing this. We appreciate you.
Pleasure.
Definitely.
All right, everyone. Have a great
Thank
rest
you.
of your day. Be in touch.
All
Ciao.
All right. Thanks, guys.
Ciao.
See ya.